Yo, what's up? What's up, my people? It's your boy Blue again. Welcome to my channel where we talk about trading. We take trades here, and we are always in blue, guys. We're always in blue. Now, I want to share my trading setup for this morning with you guys. I've been on the machines since morning today. It's been a tough day. I first of all took a trade this morning, and I lost about $5. So I had to close it, and then I had to start thinking again. What did I not do right? Because the market always punishes our errors, but it rewards our understanding more than it punishes our errors. Okay, so now I'm on my favorite instrument as usual, volatility 25. So I went to the 1 hour time frame. When things don't work out on the lower time frame, I go to the higher time frames. It's like calling onto a higher power. Think of it as calling onto a higher power when you're in trouble. You understand? So on the higher time frame, I was able to identify my elliot structure, which is where I always start from. So I had, this is my wave one, wave two, and as you can see, this is wave three here. As you can see, this is the most impulsive wave. You see, it has almost no corrections, guys. So that's how wave three generally behaves. It has almost no corrections. Look at this. You have green, green, green candles, buy candles with a single correction, a single red candle, which was not even significant at all. It was a doji. This was just a breather. When the markets run like this, they have to breathe. They pause somewhere like this and breathe, and then they continue. Now, when they hit up here now, and I start seeing the market started moving sideways up here. Something told me right there, this is where your wave three is ending. So I have projected that wave four is going to come down up to here. So this is where we project wave four to come down to around here like this. And you can do these projections using your Fibonacci tool. So guys, Fibonacci should be your companion. Fibonacci extensions should definitely be your companion. So with the Fibonacci tool, I'm projecting that the market is going to come down. Wave four will come down, and wave four should come and end somewhere around here. This dotted line I've drawn. Now it's not a hard and fast rule. It can still turn before that point, which is still okay. It can still turn after that point, which is still okay. But the point is, you will not start considering wave five until it has reached at least this point here, unless you are a gambler and you want to be gambling. Now, let me go back now to my lower time frame. After I saw that, I now went down to my 5-minute time frame, which is a time frame where things happen fast. Things set in there real quickly. You can get to see things quickly before you come up here. Now the markets are coming down here, and if you look at this 5 minutes frame here, what you realize, the market has been forming. This is the wave four coming down, but the market has been forming a series of, let me zoom out a little bit so you can see what I'm saying. The market has been forming a series of lower highs, a series of lower highs, a series of lower highs. So when I zoom out like this, as I'm doing now, you will notice that this is the first high here, and the series of next highs are lower highs. So these lower highs, as you can see here, lower highs. You can also see here lower lows. This is a low here. This is another low here. It's a third low here, and this is a fourth low here. So you can notice the series of lower lows that are being formed here. This in itself should have told you that wave four is indeed in play right now. Wave four is indeed in play now. But now, because markets are fractal in nature, you don't just say since wave four is in play, let me just open a sell trade and leave it. Unless you enter the trade right up here where you saw this double top here. But now, looking at this, you can see that the markets are fractal in nature, and there is another set of elliot waves are being formed inside the wave four. Inside the big wave four, that explains the fractal nature of markets. So let's look at those here. If you see this here, you will see that I've marked them in blue arrows. Look at the blue arrows. So this is wave four coming down, but it's coming down in the form of elliot waves. So this will be wave one, as you can see, wave one. Here you will have here wave two. This now will be wave three, and then you will have this as wave four. This will be wave 4 here. And now this is wave 5. Since this is wave 5 here, you would now have an ABC. Let me mark the ABC for you to see it. So the market is going to pull back significantly, but not too long though. The pullback has already begun. As I'm talking, you can see the pullback. So you will now have something like this. Let me mark the pullback. So I'm not trading with 4 anyway. I don't intend to trade with 4. So I am attempting to trade with 5. So there should be a pullback that looks like this. This will be 1 here. So perhaps something like this 1. And then you would have another one that looks perhaps something like this 2. And then you should have another one that looks after 1, or we call it A, after A, and then B, which comes down this way. You should have a C, which will point upwards again. So let's see if we can get B right here. Let's see if we can get B right here. And then we'll get our C wave. We should get our C wave that will look something like this. Our C wave should look something like this. This should be our C wave. So when we get our C wave in place, when we get our C wave that looks something like this, the market should continue again going down. The market should continue again going down. So the market should resume this way again going down. That will be the start of a new wave 1. Remember, all these must take place inside the big wave 4 until the wave 4 is done at the limit where I projected it should be done around there. Now, it can still turn at the 50% level before the 61.8% level. But generally, it is rare. And in such trades, I will not take them because that's generally what they call a whipsaw. Never take such a trade. A whipsaw is a trade where the market reverses, wave 4 reverses at the 50% level and goes high, and you think that it is wave 5 beginning, and then it turns from there and comes back down and hits the 61.8% level. That's a whipsaw, and they have taken capital from the market. They've taken liquidity from you. So never trade whipsaws. If you see a wave 4 reversing at the 50% level, let that trade go. Let it go. You can now trade the wave C of the ABC pattern. Allow that trade to go. You must not take every trade because these guys are not messing with you. They will blow your account. Okay, now, also, anybody who spotted this double top here, as you can see, this is a double top here, this double top here, and this double top here, would have immediately entered the trade. You can also see here this M pattern here, this M pattern, 1, 2, 3, and 4. So this is also an M pattern. This area here is the neckline. This area here is the neckline of the M. So you can spot the M pattern here, which is also quite interesting. Now, if you look at what I've just explained here, this pattern will come here to complete a head and shoulder. So this is a head here. This is a head here, as you can see. This is the shoulder on one side here. This is the head here. So it is now going to form a shoulder here, and then go down. Now, scalpers who want to scalp and take maybe 1, 2, 3 candles can do that here. So it's going to form a shoulder somewhere here and come down. But generally, I don't want to take such quick trades because such trades can cost you a lot. Because this C here is going to be impulsive. So I would rather wait when this 1, 2, 3 is done. If you are a scalper, you start from this wave 1 here again and start going down. But as for me, I will not trade this wave 4. I will wait to attempt to trade wave 5 when this wave 4 has hit the appropriate Fibonacci level, which I projected to. So there are these and other techniques that we consider when we are trading. The kind of how to set a stop loss, tailing stop losses, how to, one of the reasons why markets don't rise or fall when you want them to rise or fall, and how to identify those moves before they come. So if you like this video and the video has been helpful to you in any way, please hit the subscribe button, hit the like button, and give us a comment in the section of comments below. Let's know how we can, the kind of trading content we can make to improve your understanding. We want everybody to be able to know to trade so that you can be able to have fun at home. Thank you for watching and see you in the next video.